Hey, what's going on, everybody? Today we're talking Airbnb IPO stock research. As a disclaimer, this is not investment advice. This is just a research video that I put together meant to be educational as well as entertaining. I'm going to put us into a few different news clippings and articles surrounding the company. We're going to take a look at some different interviews with the CEO of Airbnb, and then we're going to take a look at a comparison with a similar type of company. We're looking at November, December for the IPO, and I'm pretty excited about this one, so please enjoy.
Yeah, so we have billions of searches every year on Airbnb, going to over 7 million listings and many experiences. So the first thing we have to do is we had to build a really, really robust platform. Airbnb is not an OTA. We are not just a distributor of online travel company. We're not just a distributor of hotel products. We had to first build a payment system, a payment entity. We handle more currencies than PayPal, and so we have to handle this money through our platform. We have a trust and safety division that verifies people's identity. We have 24/7 customer support. We have thousands of unique customer issues that we have to train. This is not like Amazon. The box either didn't come to your house or it did. This is a very, very bespoke platform. We have deep infrastructure. Even our ranking team that does search technology, trying to be able to help you find one of 100,000 homes in Paris. This is a pretty difficult problem. So it's a pretty robust platform, and I think the sophistication of it hopefully allows more people to participate.
Like many pioneers, you have arrows at your back. I meet people who run hotel companies. They're saying that you're hurting their margins. I'll hear about a town that doesn't want to have Airbnb in it. I'll also hear, hey, listen, they could be the next WeWork, Jim. Don't fall in love with them. How do you respond to those who, frankly, maybe are to a degree jealous of what you've accomplished?
Well, I think that ultimately the people will speak. And the first thing is, do customers love this product? The vast majority of people who book on Airbnb leave a review, 70%. And the vast majority of them love the experience. I've seen you on the show talking about your experience.
Absolutely.
So number one, we're going to first live and die by our customers, as all companies do. And I ultimately think the customer should choose which companies survive and not survive. The second thing is that our hosts have earned over $80 billion on our platform, and 50% of them are women. And one of the top professions of our hosts are school teachers. So it's just regular people mostly doing these activities. And ultimately, we've tried to partner with cities. We've had 500 different city partnerships. We collect and remit over $1.5 billion of hotel tax. And so it's really, ultimately, Jim, what I would say is people won't remember Airbnb in 2019. They won't remember about if and if and when we launch which feature. They're going to remember who we are as a company. Right. Did I like that company? Did they provide great experiences? Were people economically empowered? Were communities better off? And hopefully, if we do our job well in the coming decades, people will all say that.
I'm always going to look for a news clipping or an article where the CEO of a company is speaking. So I really liked that interview right there with the CEO of Airbnb. It just puts a face to the company, and it allows me to assess any sort of, mixed feelings I may or may not have about a company. However, if you like what the company stands for, then it's a little bit easier for you to get behind it, in my opinion. So let's take a look at this next article. Airbnb hopes to raise $3 billion in a December IPO. This article came out October 2nd. Airbnb's proposed December timing for initial public offering could be dicey because the U.S. presidential election and its aftermath is such a wild card at this point. Still, a $3 billion funding infusion could help Airbnb pay down the high-interest private equity debt that it raised earlier this year. Airbnb plans on waiting until December, after the expected market volatility of the U.S. presidential election, to execute an initial public offering and to raise about $3 billion. Right there, I think it's pretty smart for them to wait till after the election, so that way, like it says, that the volatility kind of just subsides, hopefully. The funding infusion wouldn't be huge when you consider that Airbnb raised about $2 billion in debt at double-digit interest rates in 2 rounds from private equity investors in April. Reuters broke the story about the timing of Airbnb's potential IPO, reporting that the home-sharing company wanted to wait until after the U.S. presidential election and would aim to hit the public markets in December. When Airbnb was preparing an IPO pre-pandemic, raising cash wasn't its primary motivation. The driving force was to enable employees to monetize stock options, which were due to expire. The $3 billion, though, sure couldn't hurt considering the obliteration of rentals and travel in the early stages of the pandemic, especially if Airbnb can use the money generated in an IPO to pay down the high-interest financing it attracted from private equity investors. Sources told Reuters that Airbnb, which has seen surge of bookings in the past few months, could attract a $30 billion valuation, which would be on par with the level it achieved in 2019, but would be way higher than the $18 billion valuation it garnered from the private equity investment in April. Reuters had a few additional details on Airbnb's recent performance that wasn't already public, and there was no further word on how the company might articulate a path to profitability. One issue that investors are likely looking at is Airbnb's relationship with cities and regulators. Although this undoubtedly is not the top issue in the minds of investors, Airbnb has been on a mission to resolve its house party problem following fatalities at a party at an Airbnb rental in Orinda, California last Halloween. Airbnb announced on Friday that it is banning one-night stays in the U.S. and Canada over the Halloween weekend in a move that's geared to avoid a repeat of Halloween 2019. At the same time, Vrbo announced Thursday that it was giving hosts discounted pricing for the noise-aware service in another bid to monitor guests gone wild. So, to wrap up that article, it's just talking to, I guess, the issues that investors could see with Airbnb. And honestly, it's unfortunate anytime that somebody gets involved with something tragic like that. Fatalities is awful, but I really do think that it can overcome any sort of bad press. And some people say that any press is good press. So, hopefully for the company's sake that it's able to improve some security measures. And I think that it's pretty smart of them to kind of look at Halloween weekend and kind of just say, put some limitations on it, which they're doing. So I see it as good news. Let's take a look at another article. Okay, so let's take a look at this article from Business Insider. Meet Airbnb CEO Brian Chesky, who co-founded the company in 2008 to help pay his San Francisco rent and now may be taking his $18 billion business public. This article came out in August, so there's going to be some stuff that we already know, but I'm not going to go through the whole article. Now, Airbnb has confidentially filed paperwork for an initial public offering despite a tumultuous year. The vacation rental company has taken a beating during the coronavirus pandemic, laying off 25% of its staff in May. Brian Chesky, the CEO and co-founder of Airbnb, said the company was expected to bring in less than half the revenue it earned in 2019. Chesky is worth an estimated $3.1 billion, according to Forbes. The vacation rental company, which has been rumored for months to go public sometime in 2020, has taken a hit due to the coronavirus pandemic. In May, Airbnb laid off 25% of its staff, nearly 1,900 people. And CEO Brian Chesky said that the company was expected to bring in revenues of less than half the $4.8 billion it earned in 2019. So 2019 seems like it was a really good year for this company. According to Airbnb's corporate website, the endeavor started off as a way for Chesky and Gebbia to pay their rent. In the fall of 2007, the roommates charged strangers $80 per night to sleep on an air mattress in their San Francisco apartment when local hotels were sold out for a design festival. The next spring, they officially launched their company, then named AIRBNB. So pretty cool stuff as far as innovation-wise. These guys, again, rented out an air mattress, and people were willing to pay for it, so that sparked some interest, and now look where they're at. The company, which has more than 7 million listings in more than 100,000 cities, has been battered by the coronavirus crisis. In May, Airbnb laid off 1,900 employees again, and each of the layoff staffers received a severance package that included several months' pay, a year of health care, and help from Airbnb finding a new job, the company said. And with all things considered, in my opinion, that's not bad. It could have been a lot worse, right? But I think that's pretty cool of the company to at least try to offer them some sort of severance package. Airbnb has also taken on a $2 billion in debt and agreed to having its valuation slashed from $31 billion to $18 billion as part of the debt financing. So that's going to sum it up for this article. Let's take a look at this next article.
He did say, I mean, the IPO window is more than receptive, and they did say last month that customers booked 1 million room nights in a single day for the first time since March. So what's stopping them at this point?
I think the big question is, can Airbnb move its rental stock and its market out of cities into rural areas? That's what we're seeing. I think the company said a lot of people are now renting houses for more than a week as they try to work from somewhere else, as they try to vacation in places that aren't densely populated. Airbnb is one of the few sharing economy companies that does not require a city to operate. You think about Uber, you think about Grubhub, they require population density to make their economics work. Airbnb can just move its stock and find homeowners in rural parts of the country and simply move its service over. The question is whether the support economies for rural America are there: cleaners, property managers, lawnmowers. All that stuff has to be built around rural America the way that it has built up in cities. But another big benefit for Airbnb is they've been in fights with big cities. New York City is Airbnb's biggest market. The city doesn't want them there. They move out of the cities to places where, small towns, small counties actually want that tourism income to flow. That's a big opportunity for them that might also reduce their costs.
Yeah, I mean, you're right about the battle they've had with the hospitality industry and the entrenched interests within cities. On the other hand, they have found ways to partner with hotel chains. I mean, they've been, I would argue they've been relatively adept at finding ways to be a good frenemy to some of those long-term players, don't you think?
Yeah, but I think that is a symptom of the pre-COVID economy. They were becoming a dominant player, and they were starting to leverage growth in other areas. And the hotel industry was starting to realize, look, they're not going. We can't kill them with regulation. Post-COVID economy, I think the company has to reset and fundamentally start to offer a different kind of product, which is more or less what we've heard Chesky say.
And Eli, though, it's interesting that if you dig beneath the surface in what just the product is at Airbnb, and instead look at what the assets are, they've got people who have space, and they've got people who need space, and a kind of very liquid market in those things. At a time when home offices and locations are in flux, fundamentally, the data they have and the audience that they have and the owners of capital that they have, doesn't that make them still pretty valuable?
I think so. If you think about what all of the sharing economy companies have done, is they have increased liquidity in the market. They've increased efficiency between buyers and sellers. They've made it easier for demand to find supply. That is, again, in a city, you've got a bunch of limo drivers, taxi companies, what have you. That has worked really well for those companies, but they depend on that base of supply. If Airbnb can just move it, you've got a house in the middle of nowhere, you want to rent it, it's pretty hard to find a renter from around the country. Airbnb is that marketplace for you in a way that kind of scales across the entire country. So I think there's a lot of upside for them, but they have to be willing to really fundamentally rethink what they're offering. They're not offering, before they're offering experiences. They've got Angela Ahrens on the board. They're offering luxury experiences in cities. You go to Nashville, you end up doing all this Nashville. They can't do any of that anymore. Right. They've got to recalibrate and really say, what we're offering you is space.
But I also wonder if, in a way, the collapse of WeWork is beneficial to them, because WeWork wasn't just about office space. They were trying to expand into residential space, into childcare, all kinds of space-type stuff. Now that overhyped, arguably, idea isn't really around in force anymore, does that leave some green space for Airbnb to redefine itself as it perhaps goes public?
Yeah, I think so. I think the question is whether people want to work out of homes forever, right? Whether working in someone else's house is actually enough of a change from working in your own house, or vacationing in someone else's house is actually different enough from working in your own house, or whether they need to build or acquire a different kind of stock. And one of the challenges they will have as they expand into these other areas is homeowners are buying up properties. Anecdotally, I'll tell you, I'm in upstate New York. There's a boom in the housing market here. People are buying up all kinds of things and adding them to Airbnb, but they need to renovate those homes to make them desirable for a variety of uses. And it is hard to do construction right now. Building materials are in short supply. Contractors are in short supply. We are seeing the big box stores experience sales booms as people renovate and redecorate their houses. So getting the stock online to pivot the business model when Airbnb is not actually in control of it, I think will be a challenge for them.
Let's take a quick look at this article from Seeking Alpha. JP Morgan builds a new team to trade pre-IPO giants. This article came out in early September. JP Morgan Chase is putting together a new team to match sellers and buyers in the growing market for private company shares, CNBC reports. I wanted to highlight a little bit about what this means. The trend for startups to wait longer before conducting an IPO also means, in some cases, shares aren't going to climb the way they would had they gone public earlier. For example, shares of Uber are still trading below their IPO price from over a year ago. Uber's early venture capital investors, meanwhile, made billions from their investments. That spurred institutional investors, including hedge funds, to ask JP Morgan to source stock in private companies, including Elon Musk's SpaceX, Airbnb, Robinhood, Palantir, and TikTok. The investors' demand is coming at the same time that company founders, venture capital funds, and wealth management clients want to sell their stakes in private companies. Berth believes that JP Morgan is the first big Wall Street bank to create a team dedicated to trading private shares. Goldman Sachs and Morgan Stanley have been facilitating such trades in this market for years, but don't have teams dedicated to that activity, according to people with knowledge of the two firms' operations. The market for trading shares of private companies is dominated by mostly boutique brokerages located on the West Coast, such as EquityZen, SharesPost, and Forge. Companies are staying private for longer, and that dynamic doesn't look like it's changing anytime soon, Berth said. The more the market rallies, the more people are going to want to look at alternatives. Very interesting. So, takeaway from this article is that as a retail investor, do your homework, do your due diligence when opening up a position, because the big boys and girls have decided to dedicate a team organized to take on these IPOs. And, you know, these companies, the SpaceX, Airbnb, and Robinhood, never mind Palantir, which is already trading, but those companies, at least for me, are the ones that I was kind of highlighting for the IPOs and that I would like to be a part of. So, very interesting. So just a little interjection here. Airbnb is letting people stay in the Fresh Prince of Bel-Air's mansion. And growing up, I really loved this show. So I think it's pretty cool. I know it's not for everyone, this type of news, but I think it's interesting from an investor standpoint to see that, like, TV show houses and things of this nature are being rented out. So it's, you know, Airbnb can be played like a REIT, in my opinion. It can be played as a real estate, and for all intents and purposes, it is a real estate type of company, but it's a little bit more now. It can be looked at as, like, not to the extent of like a theme park, but it's being used for entertainment purposes. People want to go live at the Fresh Prince of Bel-Air's house for, you know, a week or so. And so, you know, I think that's pretty cool. Obviously, it's something to get used to as we're moving forward. Companies are going to find all kinds of ways to get listings. So I definitely see this as good news. So, I don't know. I just wanted to interject there. I thought it was pretty cool. I love the Fresh Prince. Even including the house from the Fresh Prince of Bel-Air, you can now rent a night in hell on Airbnb. So, you know, the world is filled with all types of fascinating people. So, I thought this article was pretty cool, and with Halloween right around the corner, I thought that it would be pretty cool to showcase this article. I'm not going to go into it, but look, there's a house that apparently, you know, it's a small community, and the mayor's lair, it's only available for 3 nights for the price of $31 a night. So, you know, it's a spooky play on staying like in a haunted house or something like that. So, I don't know, man. There's something for everyone out there. All right, so I'm just going to showcase Hilton Hotels stock as just a little bit of a comparison. Hilton Hotels is in 100 countries. So just by that number, I'm trying to give it a, like I said, a comparison of possibly what Airbnb's share price could be. So again, if we wanted to understand what the fair price for a stock, you would take the EPS times the PE ratio, and that'll give you the stock price, and that's EPS for the year. So this is just a year-to-date chart, and we see that in the beginning, pre-pandemic, shares of Hilton Hotels was in the low 100s, and then obviously it took a dip down into the 50s, and to where it's currently at. It's had a decent run up into the higher 80s. So that's, just I think would be a fair price. Now, if it IPOs at like $200 or something crazy, in my opinion, I'm definitely just going to keep building up a cash position on the side, and then perhaps if it starts to drop, as most of these big institutional investment firms start to sell their shares, then the price should tumble, and I hope to pick it up at a good price. All right, I think I'm going to leave it here. I really appreciate your time. Please continue to like, share, and subscribe. I really do appreciate it. I'm pretty excited for Airbnb's IPO. I'm excited for the shares to start trading. So if there's another company IPO or an ETF that you would like for me to research, just drop it in the comment section below. Okay, until next time, I'll see y'all.